So, hello everyone. So I was saying that let's just begin with the lecture. Let's have an overview of what the course would look like, and I'll give you a gist of all the sections, all the standards I'll be coming across in this course. And just let me know once you can see my screen, please. So is my screen visible to you all?
Yes, ma'am. Visible.
Yes, ma'am.
All right. So let's just begin with the course first. So it's a 3 hours and 15 minutes paper that you all would be knowing. It's going to be a computer-based paper, which means that you will not get a pen and a paper to write your answers. And guys, please just unmute yourself. Now let's just not get into any kind of a discussion. Let's just let me speak first, and then I will take your doubts when it comes to this structure in your next class, which is tomorrow, so that I want you all to absorb what I'm saying, go through this PPT, it will be shared with you, and read it, go through it, and then we can have a discussion about your doubts tomorrow in the class. After the session ends, I'll stay a little bit longer and I'll cater to your doubts. So it's going to be a computer-based paper. That is, you'll have to use Word, PPT, etc. in your system to write your papers and present your answers. It's going to be 100 marks paper. It will be divided into two sections of 50 marks each. So how the division of 50 marks would look like is 50 will be divided into A, that is your objective test. It's going to be 3 questions of 10 marks each. When it comes to those questions, each question will have 5 subparts, each worth 2 marks, and it's going to be a computer making system wherein you marking system, as in whatever you will mark, because it's an objective paper, it'll be an MCQ. There'll be one question and you'll be given 4 options for it. You'll have to select the right answer, and that'll be checked by the computer. It's almost going to be like how OR sheets are being checked. So the computer system will be checking it. So you can be rest assured that at least 30 marks will have right amount of checking. So this is something where you can score well without even giving a doubt that my paper was not rightly checked. When it comes to 70 marks, it's going to be a written question, one question of 30 marks and 2 questions of 20 marks each, and that will be checked by your examiner. It's going to be a human being checking your paper. So there, a little bit of problem can be occurred, but we'll ensure and we'll, try giving mock tests, how you present it, so that, the teacher or the examiner who's checking has the level of interest to see or what you've written, and increase your chances of getting good marks. Now, prior knowledge of financial accounting, because once that case study comes, it is not going to be just your core auditing, because you audit your financial statements. So you should have a, say, for example, 80 to 90% of good amount of knowledge when it comes to your financial accounting, because ultimately we are financial auditors and we audit financial statements, which is your balance sheet, your P&L, cash flows and stuff. So you should have a good grip on your financial statements. 2 books. Now you'll be provided with 2 books. One is your workbook and the other is your practice kit. Practice kit comes by KPL or BPL. You can choose any of it. You do not require to do both. I have seen a couple of students, even when I was studying, I had this in mind that I have the time, why not solve both the books? But no, do not do it. You'll end up getting confused. While they both have similar questions, but the language is very different, and you need not mug up the language. Every person who's writing the answer has a different thought process, and every thought process is right almost. But stick to one book is all I'm going to say, because I've been through that student journey. I understand when people talk to each other about the course, how are you preparing it, what else are you doing to get good marks? I am a little scared, and that is the time when confusion comes up. So don't end up getting confused. Stick to one book. You can choose any of it, but I'll just suggest that go for BPL. It is more structured, I would say. But people in the market prefer at times KPL also, because it has a simpler language. But I would say that your core is to become a good professional and not just pass your exams. So why not, while you are preparing for the paper, just start focusing on the good quality language also, because that is something that's going to help you in your career. That's going to give you an edge when it comes to your professional aspect in a career, because you have to compete with a lot of people in the market. So better start preparing for good language also. Now, you'll have a certain amount of material available on ACCA Learning Hub also. And one more thing, when it comes to your workbook, I would suggest that instead of getting deep down into the workbook, understanding the language, I have summarized the notes. What I am going to give you is a summary of every standard. So that will be more than sufficient for you guys. Just go through my notes, listen to what I'm saying in the class, and then directly jump to your practice kit instead of wasting your time on the workbook. Apart from that, those people who are planning to give two papers, it is highly recommended that you start with my notes and then jump to your practice kit instead of getting lost in workbook, because it is a lot of theory and you are not required to write theory. It's a case study question that you all have to attempt. So you do not need to mug up things. You don't have to mug up the language. You just have to have a conceptual understanding. Then it's going to be a CDE platform for your mock test. Once we are through the course, once we are through your questions, your doubts, I would really recommend you people to give mock tests before you sit for your actual examination. Why? Because it will give you an idea of how CDE platform looks like. While it is extremely easy, but I have seen a couple of people freeze a little bit, because we people in India especially have that concept of writing on the paper with a pen, and we guys are more favorable towards it, because that is what we all have been doing. I understand a couple of you have appeared for different other exams also of ACCA. You would know the difference. But still, mock test is a good way to go with the final exams. Technical articleship, ACCMA is very important, because what you are studying in theory, especially when it comes to your FR or accounting, you get to apply it side by side in your practical world. So it gives you a better view, and what you are reading is what you are applying in your professional aspect of life. So somewhere down the line, it becomes more relatable and you don't have to mug it up. Now there is an examiner's report also on the ACCA portal. I think after 5 classes, I'll open up my ACCA portal and I'll show you guys, so that you have a hint of how the examiner is checking, what all examiner focuses on, because ultimately you have to serve the food that the other person has ordered, right? So it is better to understand what the examiner is expecting from you, so that you can write what the expectation looks like. Then it's going to be an exam mode, student's choice, whether you want to go to the center or you want to sit at your home and then appear for an exam. Exam tips I'll keep on giving you during the classes, so that you have a better understanding of what point to focus on. Abhi, if I tell you everything in the first go, you might just end up losing that. So when the right time comes, I'll share what you all require. Coming to your course, so first, it's going to be an introduction of audit and assurance engagement. What kind of engagements are there? What does each engagement look like? And what are you guys going to do professionally once you become ACCA or you start with your training programs? What all kinds of audit programs can you conduct, and what kind of fields that you get into? Because it's not just statutory audit, it is also about internal audits. Corporate governance, professional ethics, what will it look like as a professional? How do you ethically behave? Because you have certain amount of rules and regulations to follow. And apart from that, it is well established that as a professional, you should act ethically. So what do professional ethics look like? What are the risk assessments that you go through and conduct? Because you cannot, so the difference between internal audit and risk assessment, mota, what it looks like is that you cannot audit everything. So you go through your risk assessment process. And these days, industries have highly switched from internal auditing to risk assessment. If you look up for vacancies in Big Four also, they have an internal audit department, they have a business consulting department, and they do have risk assessment audits also being conducted. it is altogether a different field, but it is somewhat similar to what core audits you people conduct. It is just about discussing and analyzing how much a particular process is material, if at all it is material. Now, when it comes to defining materiality, there is altogether a particular different standard which tells you what kind of assertions are material, where to focus on, and it depends on your professional judgment also. If you find a particular thing that is way too risky, it becomes material. And if that is material, if it is risky, it comes into the scope of your risk assessment. Then is audit planning and documentation. So you do not just go to your client's place as an auditor and start everything. Before going to your client's place, you start with the planning. You sit as a team, you discuss what are we going to do, at what stage. You decide the stages of an audit when you plan it. Like, this is the planning stage, there is a fieldwork stage, and then there comes where you prepare working papers, you prepare the report, you sit with the client, you prepare a draft report, get it signed, and then you roll out the right final report. So there are different stages when it comes to your auditing process. um, uh, a lot of activity goes into play when it comes to audit planning, like how many resources are required, what will be the scope of my assignment, what all am I going to check, what are documents do I need to ask for from the client. This all becomes very practical because that is what you do when you go to your client's place. So we'll get into it once the specific standard comes. Evidence. So anything and everything that you do requires you to document the evidence, because if I go and I say to, say, the CFO, CEO, or your audit committee directors that, look, I have found this, this is not going right in your organization, the first thing that the person will tell me is, what proof do you have that my organization or my Rahul, are you trying to convey something? So I'll take that as a no and I'll continue. So when you go to any senior management personnel at your client's location and just say that, look, this is not going right in your organization. So you have to go with a certain amount of proof, and that proof is an evidence. Apart from that, you need evidence for your constructive opinion, that, okay, fine, this is my evidence, this hints that something is going wrong, do I need to drill down more into this particular activity or this particular process because I have found this proof. So there is a particular standard for this which speaks about what kind of audit evidence is mandatory, what kind of audit evidence is acceptable, how are you supposed to find those audit evidences, how are you supposed to report them, and how are you supposed to use those evidences. So we'll get into it step by step. Systems, internal controls, and test of controls. So sometimes it is just test of designs, wherein you see whether the designs that are in place, are they apt, or do you need to redesign your controls? Because see, there is a particular activity in an organization that is happening from point A to point Z, right? Is that activity designed correctly? Are the controls around that activity right, so that the risk is being mitigated? Or do you need to put in more controls within that activity so that the risk of occurrence of a particular mishap is minimized? So you will have to decide that. That is one. Then is test of controls. Another type of an assignment is that, see, A to Z, there are certain amount of activities happening in any and every organization. There are controls in place. So instead of designing those controls, what you do is you test those controls, you check those controls. Are they working in a manner that they should be? Are those controls present? Are they apt? Or do I need to add on certain controls? Or maybe there are way too many controls at a place where it is not even required. Say for an example, it's a very practical example. There is a warehouse. Every 2 feet, you have a CCTV camera on, and you are putting, say for an example, a guard on every door. Is it required? required because it is shelling out costs. So is that control apt, or you can minimize something or you can add on something, or there is a control in place? Is it working the way it is to work? For an example, there are CCTV cameras like I told you about. Are they working? Because CCTV camera is my control, but are those cameras working, or they are just there for decoration? There are guards at the door, but are they performing their duty well? As an auditor, you do check that. Yeah, guards are not uh, performing their duty in a way they should be. They are not present. They sleep at the time of their duty. So you have to check all of that. Auditing samples, like I said, that say for an example, a company like Airtel or Jio. So there are hundreds and thousands of transactions each minute. So even if your audit period, say, is for 1 quarter, now just imagine the number of transaction and the complexity of the transaction. Every minute, somebody is calling someone. Every minute, the data is being used. Every minute, so many people are messaging, using internet. So a lot of activities are happening simultaneously, and considering the population of the country also. So just imagine the complexity and the bulk of transaction. You cannot go through anything and everything in that transaction mode when it comes to that one particular quarter. So you will have to take out a sample that, say for an example, there are 20,000 transactions. Currently for this quarter, I plan to check only 20 transactions, or maybe 200 transactions. Now the audit sample size, how are you supposed to take the audit, the extent of your professional judgment, uh, how do you document those transactions? How exactly do you convince yourself and your client that the audit sample that I've taken is the right sample? It is sufficient to check for this quarter. Or sometimes you have to decide that, say for an example, when I was starting my audit, I decided that I'll check only 20 transactions out of 20,000. But out of those 20 transactions, I found mistakes in, say for an example, 12 transactions or 15 transactions. Now that is something which will bother me, because out of 20, 12 transactions had mistakes. So I am going to increase my sample size. Now I might just think that instead of 20, I need to check 100 transactions or 110 transactions. So audit sample, while it is fixed in the beginning, but it is flexible when it comes to your checking, because as you get into the audit, as you start checking your samples, your audit sample size can shrink also, and it can it can increase also, because it depends on what is going on in the company and what all things are you able to find out in a company. Then automated tools and techniques. So at clients' places in industries, now most of the things are automated. So you cannot go by your traditional approach of tick tick, that this is the control, is it working properly or not, and you go and check a voucher कि हाँ ये लिखा है, ये लिखा होना चाहिए था, ये लिखा या नहीं लिखा. This is not how things are going to work now. Industries have ERP systems, SAPs. There are n amount of technologies that are being used at clients' places, from warehouse to their finance teams to their HR. Everybody is using certain amount of technology. So when you have to check something, you better know that thing. So you have to be technically advanced these days, because technology is actually having a great amount of impact, not only on your career, but also on how the things are moving, how the information is flowing between one department to the another. I'll give you a very basic example. There used to be a time during traditional audits that, there used to be a book that was being prepared by the accountants, and they used to write down all the transactions. So the kind of audits at that time used to be conducted was whether the calculation is correct, is there any error when it comes to recording those transactions. But these days, say for an example, you are buying something from Urbanik or Nika, so invoice is generated automatically, your order is accepted automatically, right? So you will have to check that tool, that software which the company is using. Is that software working right? Are there any into technology. And for getting into technology, you will have to use certain amount of audit tools. There are a lot of audit tools in the market. You get to see them practically at your firm's place, or if you are into industrial training, you'll get to find the audit tools that that particular team is using in the industry. Here, when it comes to the paper, you will only get an idea on a theoretical basis, because I am not going to show you the kind of audit tools that auditors use practically. You will get that exposure in your training time, but of course theoretical knowledge you will be gaining here. Coming to audit procedures for, so if we think of a balance sheet or your P&L account, because you are financial auditors, right? So what are all are the components in a balance sheet? Your non-current assets, your current assets, which includes your inventory, your receivables, which are your debtors, your bank in cash, payable and accruals, your current liabilities, non-current liabilities, your equity, your directors' remunerations, whether it is a non-profit organization, whether it is a partnership, what is the nature of your client? Is it a company? Is it only operating in India? Is it a global company? Does it have a global footprint? What all laws and regulations are there which are applicable on that particular company? So you should have first the holistic view of the business of your client. Then you drill down to what will be your scope, because you cannot check anything and everything. Either you are checking revenue or you are checking expenses. You cannot check everything at a time, considering the complexity of transactions, the bulk of transactions. So you better define the scope of your audit assignment, right? So this is just a couple of examples of what you do in a company, but it is way too wide when it comes to your practical experience. You check a lot of things, but not everything at a time. Then is your audit review and finalization. So once you have completed your, completed your assignment of audit, you sit with your partner. There is a term called as partner review. So your partner, your engagement manager, you sit with them and, you give them a review of what all you have done. Then, because those people are more experienced when it comes to auditing or that particular profession, they take a professional judgment of what all is to be included in the draft report. Once the draft report is framed, you sit with the client, you discuss your points, what all you have found, what are your recommendations, and the client and you come to a conclusion of what all should go in the final report. And once that is finalized, your final report is presented to the audit committee by mostly by your partner or your engagement manager. You, within this time, what you do is that you synthesize your work papers, you finalize your work papers, you record them, so that in the next audit assignment, if you are going to the same client, you have something to review. Or if another team is going for this client's assignment, so they have a base, they have your notes, they have your working papers, which will work as a good starting point for them. So maintaining your working papers is really very important. Taking a backup of your working papers is also very important. And then rolling out the report. So there is a different standard for all these points. How do you plan it? What kind of audits do you do? What kind of procedures do you follow? How do you take a sample? What are your internal controls and tests of controls? And how do you create a report, types of opinions that you give in a report, and what should be the format of your report? So everything will come in further classes. Each point has a different standard. I'm telling you guys again. So let's begin with the first chapter, which is Introduction to Audit and Audit Assurance. Just let me know in case you people want any kind of break, because our class will be till 12. So just let me know by when do you guys want to go for a break. 10:30, 10:15. Let me know in the chat box once. So I guess by far the kind of messages that I've received are people are saying that it is better if we go for a break for 10:30. It's gonna be just a 15 minutes break because we have a lot to cover, right? So we'll take our break on 10:30 and we'll be back by 10:45. I'm trying as much possible to make it interactive. Any problem that you people have, please you can write it in the chat box. And so let's just begin with the index of the chapter. So objectives and principles of external audit engagements. Now, you all would be knowing so by far. Am I audible to you people? And is my screen visible? All right. So, as you all would be knowing that there are two types of audit. If I give you a bird's eye view, one is your external audit, one is your internal audit. One is that audit, one is your internal audit. When it comes to internal audit, it gets more into the processes. Like there are different kinds of processes that an internal auditor looks into. Like what is your P2P, that process? How is your O2C process, which is your revenue? How are you creating your revenue? P2P is how are you sourcing your material? There could be your HR audit, there could be your payroll audit. So internal auditor gets into the processes of and the information that flows within a company. External auditor or stat auditor, it is a mandatory audit first of all, and that report is being used by your stakeholders. It is publicized, your banks, your shareholders who are investing in your company, management, everybody, taxation authorities, everybody, government uses your stat auditors report, basis which they form a decision whether they are supposed to invest in your company, do they give you the loan. When it comes to your debt holders or your banks, they require your stat audit. Stat audit is more inclined towards your how your financials are presented. Are they complete? Are they accurate? What is there anything missing? Is there any manipulation when it comes to presentation of your financial statement? Are all IFRS being catered to when it comes to preparation of your financial statements? So external auditors basically comment on your financial statements. Internal auditors comment on your working of the company. When it comes to working of the company, is everything going well in the company? Is the business being managed the way it is to be managed? Stat auditors tell you, are your financial statements in place, accurate, complete? The laws and regulations that you were supposed to follow, are they being followed? um, are your financial statements giving the right picture? Like the client is not manipulating the revenue. You could be earning a revenue of say 50 and you could be showing it say 150 due to manipulation. So that is what the stat auditor helps you with and releases the report in the market, so that is what drives the market. Also your share price also gets driven at times by your audit report. Because if the auditor says, like for an example, for Byju's, if the auditor says that no, as per us, company is not going in the right direction, people start disinvesting in your shares. So it this particular report rolled out by the stat auditor is an important one and it is mandatory by law. Second point, nature and development of audit and other assurance engagements. So what is the nature of your audit? What is the scope of your audit? Concept of accountability, stewardship, and agency. This particular section talks about your directors, because one person is running the company, other person is the owner, and there can be clashes. Like if you are a shareholder, or say for an example, when it comes to Mukesh Ambani, he's the owner of the company in a way, right? So for them, it should be profitable. It would be more of increasing the profitability, right? But there is another person who are directors, management, employees. For them, it is all about their salary, their remuneration. So for them, stability, going concern, is the company still on the going concern path? It won't be shut down. The business will not go down the drain. Stability, because people are earning uh, they have to support their families. They are working in the company so that they can have a month on month salary being drawn. So there are two sets of people involved. There is a corporate wheel. Company is different from its owner. Like if I give you a practical example, that Kingfisher guy, right? So he is different from his company, right? So these things we will also study, what the law says, what the auditing standard says, and how are you supposed to club both of them and make a decision. What are the objectives of assurance engagement? So when you define the scope, that okay, fine, say for an example, I am going to do your revenue audit. Now that becomes your scope. But what is the objective? When you sit with the management, you try taking an understanding. Is there a problem when it comes to revenue leakage? Because if at all management indicates that there are problems when it comes to revenue leakage, or maybe they do not know what kind of IFRS is applicable when it comes to booking their revenue, so your objective in that revenue audit becomes you have to find out leakages in your revenue. So you have to define objective of why are you doing that particular activity post you have defined your scope of engagement. Then five elements of assurance engagement, types of assurance engagements, level of assurance provided by an external auditor. Now every point has its own different meaning. uh, in this particular session only, I'll teach you what are the five elements of assurance engagement, the types of assurance engagements that are there in place. Matlab, it's just not one. It's a ballpark. I would say it's a ballpark word when it comes to audit assurance engagement. But there are different types of engagements that are happening in the market, and you do as a professional. So we'll get down into that also. The level of assurance. Now, there are majorly two types of assurances. One is it is a reasonable assurance that mota I feel ki haan, what I am recommending, it is reasonable. But you never, as an auditor, you never guarantee the client that what I've written is 110% going to happen. Yeah, what I've written is 110% correct. No, you don't do that. You say, as for me, I can reasonably assure you that everything at your place is going well. You do not write it with your blood that what I have checked upon basis that everything is 100% right and nothing can go wrong. No, you don't do that, because I'll give you a very good example. You work on sample basis. You do not check everything. So when I say I checked 100 transactions out of 20,000, I can only give a reasonable assurance that वो 100 transactions that I checked, उसमें से I can say कि there is a reasonable assurance that everything is going well. But there is always a risk कि जो बाकी के transactions that I have not checked, something or the other might have gone wrong in those transactions. So while 80% I can say that there is a reasonable assurance things are right, financial statements are presented and prepared in a right manner, but I cannot 100% assure you, and things can go down the hill even after my rolling out the report. And other review engagements, there are a lot of other things that you review, other types of engagements that I'll let you guys know in this session. And the concept of true and fair presentation. Now, truth has different definitions, fair has different definitions, right? Something that is, for me, say 100% true could be only 50% true to you, right? So how does the law define the concept of true and fair presentation? Why is true and fair presentation of your financial statements very important? Who all get affected by the presentation of financial statements? We'll get into these components also. Then what are the limitations of external audits? Like I gave you an example currently that you are working on a sample basis. So that becomes a limitation. You cannot check all 20,000 transactions. So that is a limitation. So what do the limitations look like? What are the kinds of limitations that you come across in an external audit engagement? We will discuss that. Assurance comfort. What assurance is? you are assuring somebody, like say for example, you go to a doctor and the doctor prescribes you something and gives you an assurance that you'll be fine. So as a financial doctor, if I would say so, as an auditor, what kind of assurance do you give to your client? What kind of assurance do you give to your to the users of your report? So who can be the users of your report? Shareholders in the market, public in general, government, taxation authorities, banks, whoever is using your report. The person who's using your report, how do you assure that person that the report is right, that everything is going well in the organization that you've rolled out the report for? What level of comfort do you give to those users of your report? Because it is your report basis which people make a decision, right? If the auditor says that, you know, things are going good, you end up buying shares. So there are, you have certain amount of responsibility on your shoulders. You are accountable for what you say, which is why you are considered as a premium type of a professional, because people rely on you. They, in the market you have a reputation because you have certain amount of people who rely on your opinions. So giving an opinion is a good amount of responsibility when it comes to your character, your profession. So what kind of assurance are you giving to different kind of users of the report? And the different level of assurance, like every user of a report has a different agenda in mind when they are reading your report. So what are the level different? So there will be different levels of assurance also. Like when you go to a doctor, you can have fever, that'll be a different kind of a prescription. You can have a headache, that'll be a different kind of a prescription, right? So your report is driven by your user's objective. If I am giving a report to the bank would want to know how financially stable the company is, because bank will give you the loan. So they would want to know whether that company will be able to pay back their principal amount and their interest amount. So their objective of using your report is to understand the financial viability of that particular company. But say for an example, there is an investor in the market. Now that investor is reading your report. So that investor's objective would be ki, will the share price rise? Now, when it comes to share price, another component that impacts is the company going to earn profit or will it be a loss making company? Is the revenue trend which is being given in the financial statements, because when you prepare financial statements you give comparative also of previous year, and at times you go uh, to 2 to 3 previous years also when it comes to comparatives. So are the figures correct? Do I genuinely invest in the company? Is the company working on a going concern model? Because say for an example, I invest in that company and that company goes down the drain. So the money that I have invested, the share will crash down, right? So is it on a going concern concept? Do I invest in that company? Will that company be profitable? So that investor has a different objective in mind.
To understand how better you understood the concept and the term, and how better you are able to apply them next. Okay, so it's always better to go along with the classes, guys. All of you try
Can
to
you
be
write down your question in the chat box,
rather than
because I am not able to hear you.
being very irregular. It's always
So Ashna, you are not audible. Can you just write down your question in the chat box? Thank you. Then comes to example, assurance engagement in external audit, providing an opinion on financial statement for assurance of equity shareholders as whether or not financial statements are reliable or not. So this is what I just explained to you people. Other key assurance services in the syllabus include review engagements, internal audit engagements. So like I told you, there are different types of audits that are being conducted for the client. So we'll drill down into what kind of audit engagements do you have, what do you review in each kind of an audit assignment. We will also see that there are essentially two levels of assurance: reasonable assurance and limited assurance. So while reasonable assurance is not also something that you say that it is 100% correct, but there is another level which is limited assurance, जो उससे भी थोड़ा कम level of assurance देता है. Mostly in the market, what happens is the more preferable one is reasonable assurance, almost out of 199 assignments that come for reasonable assurance, but there are certain amount of assignments which only require your limited assurance, and there the amount of exercise that you do in reasonable assurance gets shrunken, and then you do comparatively less amount of you perform less amount of work. Your sample size shrinks, so because it is a limited assurance. Now, Ashna, I did not get your question, and you weren't audible at that point of time. So if you could just send me your question in the chat box, I'll cater to it. Meanwhile, we'll just go with the class. So what is assurance? An assurance engagement is an engagement in which a practitioner, now who is a practitioner? Your chartered accountant is a practitioner, ACCA is a practitioner, right? Professional professional who has the ability and competence to issue a report is considered as a practitioner here. Engagement, again, what kind of an audit assignment do you have defines your engagement. Obtains sufficient appropriate evidence. Sufficient is which is enough. Like, I want to have sufficient food because I'm hungry. I don't want to overeat it, right? And I don't want to starve also. I need enough amount of evidence, right? So we each word will be described in that respective standard when it comes. Engagement has its own different standard. Practitioner, mota moti, it has a definition of a professional as a ACCA, right? Sufficient and appropriate evidence. These three words are very important, and they will keep on coming in your course because everything depends on your evidence. Your sample size will depend on your evidence. Your report, your forming an opinion, everything will depend on your evidence. The extent to which you make your working papers will depend on the kind of evidence you were able to gather. So your evidence should be appropriate. For an example, if you go to a doctor, you have say headache, and that person gives you a medicine to treat your stomach, so that is not an appropriate medicine, right? So the amount of evidence that you takes, it should hit the nail. It should be appropriate for the scope of your assignment. Say for an example, I am checking ABC, so my evidence should be inclined with ABC activities. It should not be ki I was checking ABC, but the evidence is pointing towards K. No, that should not happen. Yes, if you come across during your audit assignment that something is going wrong when it comes to K, you will drill down into it. You will go to the client that during my audit, I have found this also. And do you want me to change the scope of my assignment and check K also? Once that is agreed, you start checking K. But for now, if the scope says it is ABC, you find evidences that point towards ABC only, because you have to have appropriate evidences, sufficient evidences. If I go to my client's management and I say that I have 10% of evidence to prove this, he will say that 10% is very less. Come to me when you have 80% of evidence, or say, for example, more than 50% of evidence for me to act upon it. Because if you do not have sufficient evidence, the person might not act upon that. Management has a lot of things to do. People who have a regular job at the client's place, they already have a lot of work to do on their plate, right? So when an auditor recommends something that this and this is to be implemented, you should go with a sufficient amount of evidence. For an example, you all are writing your papers, right? Now if an examiner feels that you are cheating, that examiner needs to have a sufficient evidence to prove that you people are cheating, right? It is not just ki maine dekha that you are cheating and done. No, that person needs to catch you at the right amount of time to prove that you were cheating, right? So sufficient evidence also has good amount of value when it comes to proving your point. So these three words will keep on coming, and they have a different standard of their own. We'll drill down into it once we get to that standard. In order to express a conclusion designed to enhance the degree of confidence. Now, what happens is, what is the role of evidence? Through evidence, you derive the conclusion. Now, what is your conclusion? Your conclusion is sharing your opinion. Your opinion will be based on the evidence and designed to enhance the confidence. The larger amount and the better quality of an evidence you have in hand will give a higher degree of confidence to your team and your client, right? Which is that the quality of evidence will help you influence your client. So as an auditor, you have to remain firm that you will not get influenced by your client. You are somebody who has to influence your client, because you are an independent person. Nobody can influence you. You have to influence others. In order to influence others, you need to have an evidence. In order to let the other person have the confidence that whatever you are saying is documented, has an attached evidence, will increase the level of confidence in you as a professional. Then, of intended users, I have already defined who intended users are: your shareholders, management, banks, etc. Users other than the responsible party about the outcome. Now, who is the responsible party here? Your auditing, who's getting the audit done. About the outcome of the evaluation and measurement of a subject matter against criteria. Now, criteria, this is the International Framework of Assurance Engagement 7 that defines the criteria. So once we get to this International Framework 7, we'll define the criteria also in depth. Practitioner, again, it's going to be ACCA, or say for an example, another professional. Like I told you, there are different amounts of engagements that keep on happening. So there could be something wherein, you require an engineer to form an opinion. Say for an example, there is a society being built, and for that society to be built, you need a civil engineer to give you a go that the land is solid enough that you can build, say, for an example, 20 to 30 floors on that land, right? So there, the practitioner would be your civil engineer. So basis the nature of your assignment, the practitioner comes into play. But currently we are talking about stat audits. So it is audit of your financial statements. It is mandatory by law, and it is written in the law that your chartered accountant is the person who's supposed to sign your report. So here the practitioner, when it comes to stat audit, is ACCA. Now comes your intended user. Like I told you, it could be an individual like your shareholders, it could be organizations, your competitors in the market. When I talk about organizations, it could be your competitors, it could be your own clients or management. Then groups. Again, groups could be your banks, government, taxation authorities, etc., etc. Therefore, that the practitioner expects will use the assurance report. Now, is the responsible party the party responsible for the underlying subject matter. Your client is the responsible party, because when you roll out the report also, you just say that I am only giving you an opinion, but the laws, rules and regulations are being followed or not, that is the responsibility of the management. See, as an auditor, I can only write in my report that all the rules and regulations that are applicable on this ABC organization are either being followed or not followed. But it is not my duty as an auditor to go to that organization and ensure that the rule is being followed. That is management's responsibility. That is management's work. I will only go to an organization and say, कर रहे हैं या नहीं कर रहे हैं. But उनसे करवाना मेरा काम नहीं है. वो उस management का काम है. Because they are sitting in that company for an entire year. I go and I check their financials of 12 months within a quarter at max. 3 months is zyada, no audit assignment goes. So I am only getting 3 months, and that also is not sufficient considering the bulk of transactions at a particular organization. So I will only give my opinion that as per me, management and the rules and regulations are being followed by the management and are being implemented by the management. But implementation role, implementation's responsibility is that of the management. That is what they are taking the salary for. That is their work, that is their job. My job is to tell people that they are doing their job right. In simple terms, an assurance engagement is when a professional, that is ACCA, you people, gather enough evidence. Now, what can be the different types of evidences? Documentation, photocopies, original documents, snapshot of transactions. When you use audit tools, you get snapshots of audit trails. So we'll define the kinds of evidences also. Matlab, sometimes it could be a phone call also. Sometimes it can be a video recording also. Sometimes it could be your own observation. Sometimes it could be a particular contract that is not being followed. So it'll be a original copy of that contract. So what does your evidence look like? In what form is it supposed to be documented? Once that standard comes, we'll get into that also. To make a conclusion, what will be your conclusion as an auditor? Ultimately, your goal is to form an opinion and communicate it. So expressing an opinion becomes your conclusion. That increases the confidence of people. Again, it's just the repetition. These people are going to be the users of your report. So this will your report will increase their confidence. Who will use this information? Now, as a stat auditor, you are checking financial information. Where is the financial information stored? It is stored in the balance sheet. It is stored in your P&L account. It is stored in your cash flows. I am assuming that everybody has at least above 50% knowledge about financial statements. Uh, that is mandatory because you can only audit when you know what is to be audited. So please brush up your accounting knowledge also, because that is what you have to audit, right? Except for the person and organization for that information, which is your management. See, these are the people who are responsible for preparing the financial information, right? So they cannot be the users of your stat audit report because उन्होंने ही prepare किया है, right? So इनका role is preparation. इन लोगों का role is these are the people who are using your report, and your work is to define give the opinion on how management has made the report. So there are three parties involved. One is the auditor, जिसका काम है opinion देना कि management कैसा काम कर रही है. Second party is your management, जिसका काम है उस काम को प्रिपेयर करना. जब वो प्रिपेयर करेंगे आप तभी चेक करोगे. एंड थर्ड पार्टी इज द यूजर्स ऑफ योर फाइनेंशियल स्टेटमेंट. हर यूजर का एक अलग ऑब्जेक्टिव होगा आपकी रिपोर्ट को चेक करने के लिए. लेट्स टेक अ ब्रेक. Akanksha, I'll just read your question during the break time and I'll solve your query post the class ends, because other people are also here. Let's just value each other's time. Once the class ends at 12, I'll take up your question and other people can leave as per their will. All right. So let's just take a break, guys. Okay. Bye-bye. So no, so you do not need to note down your the points that I'm giving you, because these notes that I'm reading from are created by the faculties, and you will be getting this PPT. This is the PPT that I want you all to focus on instead of your workbook. I am not against using the workbook, but it will eat up a lot of your time. So when you people have office or you people have other studies also to go through, other subjects also to study, these are your pinpointed notes. So they cater to your concept. So listen to what I'm saying right now. Read the notes, read this PPT. These are your notes which are being prepared by us, and go through these notes. build your conceptual understanding, and that then just start solving your questions, because I want you all to have a doubt class also on a bi-weekly basis. So when I say bi-weekly, it would be one doubt class after four sessions. Why am I saying this? Because see, once you will solve the question, a lot of your doubts that you people are having during your conceptual understanding will get cleared on your own, right? And see, one thing is that I spoon feed you people, and another is that you people clear your own doubts, because once you do it on your own, you will never forget it. I can repeat one thing again and again, but when you realize it on your own, that is something you will never forget. So first try solving the questions basis the concept. If then also you have doubts, then come to me. Why am I saying this? I don't have a problem if you ask me any kind of a doubt. I'll share my number also, so that you can people reach out to me directly even after the class. But the concept here, the reason behind my saying this is that I want you all to work also. And see, there are 20 people, say for an example, in the class. Not everybody has the time to go through every other person's doubts, right? So we should respect each other's time. We have a limited time period within which we have to, wrap up this course. So if I stretch a class due to a certain amount of doubts, other people might not like it, right? So you people can reach out to me. I'll share my number, and let's just go ahead with the class. Let me just go through the messages once. So basically, I have a full-time job. Weekdays, let's just have a discussion on the group when you people want to have a class, doubt session. But let's just go through four classes once. Uh, when we all have come to a particular stage of solving the questions, when everybody in the class has solved the questions, and then let's decide when to keep the doubt class. I can keep a doubt class in weekdays also, but let's just first finish first four classes, right? So now the topic is elements of assurance engagement. Now, what are the elements? Basically, these are the best practices which are being followed in an industry when you are conducting an audit, right? You have to follow a certain criteria when you when you conduct an audit, because you should basically have a framework. Like, why do we prepare an index before starting any subject? We prepare an index so that we have a holistic view of what all is there. So these are the best practices. Now, the acronym for it is CREST. CREST may C stands for criteria, then is your report, then is your evidence, then is the subject matter, and then there is third party relationship. I'll define each of it. Criteria. Now, when you are conducting an audit, what you have to check, what do you need to evaluate? Evaluate is checking, right? So are you checking standards? Are you checking a particular law or regulation that is applicable on that particular company? Or are you just checking FRF compliance? So the criteria against which the subject matter is being evaluated. Subject matter is your financial statements here, because you are doing an external audit. So are the financial statements being prepared as per the standards? Are your IFRS, your FRF terms being followed when it comes to preparation of your financial statements? Are there certain amount of disclosures being given which your FRF requires to be disclosed? The laws and regulations. Now, there are different kinds of businesses that you come across in your professional journey. So, say for an example, there is a company which is regulated by SEBI or FEMA. So are you conducting a FEMA audit? Are you conducting IT audit? Are you conducting a Companies Act audit? Because say for an example, you are going to a bank for an audit. Now the number of rules and regulations and the kind of rules and regulations would be different, which are applicable on a bank, and the rules and regulations, laws that are applicable to, say, a manufacturing concern like Tata Motors will be completely different. So before you go to a client's place, you do sit down in the planning phase and you discuss what all rules and regulations are applicable on my client, what is the nature of my client's business, which industry does my client fall into, are there any specific rules and regulations, or is there any updation in the rules and regulations or laws that are applicable on my client. So you go prepared. You don't go with a blank face to the client, else you'll just lose out the business, right? And your credibility also as a professional. So first you sit down and you understand what your criteria should be when you are conducting an audit. Second, report. Now there are different types of communication modes. The two prevalent ones are your verbal communication and the other is your written communication. So when we are going to a client's place, it is a formal engagement that we happen to have with the client. So we engage in a formal communication. Like in an office, when you are working, you must have seen that there is a general practice. We do not really communicate verbally. We tell our team members also that instead of giving me a call and telling me things on a call, just do one thing, write me a mail, because you should have a trail of what the discussion is going on, who has said what. That email trail becomes your log, your proof of what is happening in the team, right? So when you are communicating with the client, how do you communicate and what do you communicate for in a report is your opinion. That is your conclusion. That is your objective as an auditor. This is what something I explained you prior to in the first half of our class, right? So when you give client the report, you give it even at the draft report, which is not a final report, you do it in a written form. And before starting your audit engagement program, before doing anything, when you start with an engagement letter, you tell the client that, look, my report that I will roll out after my assignment has ended, this will be the format of the report. This is what you can expect from me. This is what the report would look like. These are the headings or the subheadings that I'll give you after my work is completed. So you tell the client the format. See, everything should be synthesized and synchronized. So you should have a particular format. Even if you are writing your answers for the paper, you have to follow a particular format for a better presentation, right? You cannot write anything and everything from here and there. One point is here, the next point goes after 2 to 3 paragraphs. You have to prepare a linkage when you are writing your answers also to gain good marks, right? So you follow a format, a formal format in everything. That goes for your report also. It is to be a written report expressing your opinion. Written report because of formal communication. Report is being rolled out to give your opinion as a practitioner, which is issued to the intended users. Now you know who all are the intended users. I would want you all to revise also once you get these notes in an appropriate format, a form which is once we get down to that standard of reporting, you will get a glimpse of how an audit report looks like, what format is being followed in when you prepare an audit report. So you'll get to that. Now comes evidence. We discussed it prior to our break also, but let's just read it once. So sufficient evidence needs to be gathered to provide a basis for expressing the opinion or conclusion. Now we know yes, we need this amount of evidence which is to be sufficient and appropriate in order to express our opinion and influence the client and the intended users. Now, evidence, how do you gather the evidence? One is that I need an evidence to prove my point, but how will I gather that evidence? So there is test of controls and test of details, analytical procedures, and inspections that happen. So inspection, how do you do it? When you go to the client's place, you observe things, right? You prepare a questionnaire when you go to a client's place. You ask their employees certain amount of questions. There is a tactic also that you apply when it comes to asking questions. You ask similar questions in different formats from the same set of people. And there is another tactic, which is that you ask the same question to different people working in the same department, because while people can be synchronized, they can lie as a whole in order to manipulate. the financial statements. But when you ask one question in different formats, the probability is that the truth will come out. So you have to be very street smart if you are working as an auditor, and because you have to collect evidence, and that evidence is the basis of your opinion. So we will get to these tactics also in the coming standards. Now, analytical procedures are also defined in the coming standards, like you do an arithmetic check, you do a field check. Now, arithmetic check is uh, you have just started an audit for your first quarter, so you will check whether the opening balances and closing balances, do they match? Because, say for an example, at the closing time there was a liability of 100 rupees, but when you check the opening balance there is a liability of 200 rupees. So you will have to ask for a RICO, or uh, is there an arithmetical problem? Because, see, on 31st of March liability was 100, and 1st of April it becomes 200. So what happened in that 200 hours? That is something which is not acceptable. Your opening balance and closing balance should match. So you do certain amount of analytical procedures, you do certain amount of arithmetical calculations, you recalculate something. Say for an example, you are checking fixed assets calculation in FAR. Now, what is FAR in practical language? It is fixed asset register. So what you do is you do a mathematical calculation, you reperform the calculation of a particular block of asset to understand whether the depreciation is calculated correctly. If an asset was sold out, or if an asset is bought, so how the gain or loss on that selling of an asset being treated. You do an audit trail. Are there right amount of is there a right amount of documentation in place? If you sold an asset, is there a bill, is there a voucher, do the rates match? Because you have to understand that when you are passing an opinion on the financial statements, completeness and accuracy, you have to check the documentation, up proper up papers in place. Say for an example, the company in an FAR has said that we have sold an asset for 200 rupees. Is there an invoice selling that particular asset for 200 rupees, or have you sold it only for 150 and you are showing in your books that we sold it for 200? The profit or loss that is being calculated on the sale of that asset, is it calculated correctly? Are the basis of that calculation correct? Is the calculation in itself correct? Because sometimes what happens is that management, the finance team is overburdened, so they do end up making mistakes. They might write 200 as 2000. So the data being punched, is it correct? So you do all of that. Now, coming to test of controls and test of details, it is an important topic, theoretical wise also, theory wise also, and practicality wise also. So I will give you a good tabular form difference between test of controls and test of details, because test of details also comes down to your substantive procedures. It is an important topic, and it has a standard of its own. When we come to that, I will give you an in-depth explanation of it, and there will be a written tabular difference given when it comes to your test of controls and test of details. Now, the subject matter, the data to be evaluated, which is prepared by the responsible party. Who is the responsible party? It is the management of the organization that you are auditing. So you evaluate whether the responsible party, which is the management, have they prepared the data correctly or not. Data can be, when I talk about preparing the data correctly, it is not just the preparation of your financial statements. You drill down ki, are there proper invoices being maintained? If you are booking your sales, you can book in your books that we have 5,000 crores of sale, but are there supporting invoices claiming and proving that you have made a sale of 5,000 or not? So you have to check whether the data is maintained properly by the organization's management or not, and whether the data which is being maintained, is it in right form as per law, and is it concluding to the right figure of sales or not. Then data can be of financial nature, which is historical nature. So see, when you are forming an opinion on the financial statements, when you are auditing your financial statements, you end up going into the history of the financial statements, because see, in India, it is April to March, right? So when March comes to close, you end up checking an entire 12 months cycle financial statements. So all those 12 months figures have already happened. So you give you check the historical data. Now what all do you check when it comes to your historical data? You check the balance sheet, you check the P&L, you check the cash flow, you end up checking vouchers, you end up checking contracts, you end up checking whether the ledgers are prepared properly, whether the journal entries are being passed correctly or not, and the non-financial aspects of it also, like your key performance indicators. So that is very practical. Like for an example, if I'm checking the revenue, I will see for a trend. For an example, last year they made a sale of 100. This year they made a sale of 200. Third year they made a sale of only 50. So what happened? I will check the trend. Why is the sales going down? Or maybe why is the sale shooting? For an example, from 100 to 200, this year they made a sale of say 600. So what happened? Is the figure being manipulated? Is the picture being given, is it correct or not? How can you make that jump of from 200 to 600? So you get into that aspect also. You have to have a skeptical nature, you have to ask a lot of questions, and you have to be super aware of what is happening in the industry, how the industry is trending, what is the market need, where is the consumer interest going, because the consumer interest should match your financials, right? So you have to be super aware when it comes to becoming an auditor. And then behavior, compliance and rules and regulations, are they being followed? Is there a general culture at your client's place that they have to be law abiding citizens, they have to follow the rules and regulations, or it is very lethargic kind of an environment in an organization that, okay, fine, even if we skip say a couple of rules and regulations, it will not have a very big impact. So you have to see tone at the top. When I say tone at the top, how is your C-level executives working? What kind of environment have they built? Say for an example, if your senior leadership is very sincere when it comes to being ethical, when your senior is following the laws and regulations, it is seen that mostly the juniors also follow that. But if your senior is not following the rules and regulations and is looking for loopholes, that is what end up getting forwarded. Like a very practical example to explain is, if my CFO is coming to to my office on time, say for example my office starts at 9, and whenever I reach my office, I end up seeing my CFO sitting at his desk, I will come on time. But if I see that my CFO is not coming till 10, I might come till 10:30, 9:30, right? So tone at the top is also something that you as an auditor end up checking. Now, third party relationships, intended users relationship, you end up checking. How is your management's relationship with the auditor? There are different types of auditors also for a particular company. How are they interacting? What are the expectations of the stakeholders? Are there any related parties? Is the management selling something to the company? So you end up checking third party relationships also, and there is a third party and a related party standard also for this particular topic. So we'll get down to it once it comes. I have a couple of questions. Uh, okay. I think I've answered this, Mohit. So, and Madhvi. So, okay. Now I want you all to do this particular activity. I would request you all to just read this question on your own, and then let's get into the solving part. I'm giving you all 5 minutes. So has everyone read this question? I would want you all to answer because I want it to be more of an interactive session instead of just me going on and on. So for the first point, who would want to answer? Like just come forward and let's just interact. Correct, Madhvi. Anyone else? Yes, correct, Madhvi. Okay. So now I'll take it forward, considering it's just Madhvi who's answering all the questions. What are the examples of assurance report existence? So you are currently thinking of buying a house, right? So just take it very simply without taking any load on your head. You want to buy a house, right? So what all will you check is something what the auditor would also want to check. So assurance report could obtain whether the property is legal or not. Is it authorized colony? Is the land authorized or not? Are there is there a purchase deal in place? Is there an affidavit signed by both the parties and the government? Is the rate as per the circle rate? So every property has its own circle rate, which is defined by the government authorities, right? So this shouldn't happen that the circle rate says that the property is for 2 CR and the person has bought that property for 4 CR. So if there is a gap, why is there a gap? Right? So you have to have a skeptic mind and a skeptic nature. You have to ask questions from yourself and from the client, jot them down and see what kind of reports do you have to roll out. Is the land in right place, in right form? Say for an example, you have built an office or you are buying a house and you was super advanced and you are way too rich after you become a professional. So you would want to ask whether this is an earthquake resistant property or not. If the clients, say for an example, if the builder is saying that, I am charging you 50 lakhs more for this house because this is, when earthquake comes, the kind of bricks we have used, the material that we have used is earthquake resistant. So you just want before buying a property, before giving 50 lakhs of an amount, you won't just blindly follow the builder, right? You would ask for certain kind of certification that give me a proof of what you are saying, that it's a, earthquake resistant building. What kind of a certification do you have? What kind of approval do you have that this genuinely is an earthquake resistant building? So all of these things will come into your assurance. You, before buying a property, you assure yourself that the worth of that property is genuinely 4 CR. What work? You work for a local council which is just about to issue 10,000 grant to a dollar 10,000 grant to an organization. That is, you are working in an organization which is planning to give $10,000 to a particular organization which runs sports activities. Now the organization that you want to give the money to is running sports activities for children with special needs. That is, they could be handicapped, right? So those are special children. What assurance report could you obtain and who might provide this? So now here you have two questions to deal with. If I am giving money to a particular organization that is working for special children and it is leading in sports activities, I might want to know how will they use my money. I am giving you $10,000. How will you use it? Like for an example, it is a classic example when a company takes loan also from the bank. If the company is taking loan, how will that company use the bank's money is what the bank wants to know. So here I would want to know where that $10,000 would go. How will it be used? So I will get into this aspect, right? Now, examples of assurance assignments, yeah, assurance engagements. So what types of assurance engagements do you come across when you are working as an auditor? One it's your stat audit that you conduct. What do you review? You review cash flow forecasts. I hope you all have an idea of what cash flow forecasts is when it is presented to the bank to obtain funding. Like I mentioned, there are different users of your reports. So if the bank is using, they would want to know if you are liquid enough to pay back their interest on time, to pay back their principal amount. So they would want to know how your cash flow looks like. How are you earning that money? To what extent you will earn that money? How much of amount are you shelling out in paying that bank's interest? Because if you are only earning enough to pay their interest, what will the going concern look like? Because it might be that currently you are in a position to pay back that interest to the bank, but you do not have any extra money. So how will you take your business forward? So cash flow forecast is very important to the bank. A review of an entity's financial results for the first half of the year. A review of threats which could affect the business ability to continue as a going concern. Like, what could be the possible threats when it comes to going concern? Say, for an example, my client has an industry located near the bank of Yamuna River. They are operating from Agra, and there comes a particular law by government that any industry that is dealing into chemical business, they are supposed to shut down. Or maybe my client is operating in manufacturing of plastic products, and government comes up with a rule that you cannot sell plastic goods, right? And they'll be banned in another 6 months. So now that will pose an impact on the going concern of my client. So you have to be very aware, completely updated of what is happening in the world, so that you can better form an opinion. So you have to see what kind of internal and external threats can come up to your client's location and your client's business that might impact that client's going concern. Now, when I told you about plastic being banned by the government, that comes as an external threat, but there could be internal threats also. Like, say for an example, Maruti, you might all have heard a lot about strikes happening at Maruti, right? It's a generic, like it happens every year around Diwali. So now there is a trend that a strike would happen. So it will not, you study the trends also. So that will not have an impact on the going concern. But if I give you a very practical example, there were a lot of industries that closed down during farmers' protest, because it was all, the way was all blocked. Raw material couldn't go, they could not sell their finished products, the labor could not travel to their factory location. So that also becomes your external threat. But if your employees have a habit of conducting fraud, if your employees are sitting on strike every now and then, how will you operate your business? So that becomes an internal threat to your going concern. Say for an example, you have 100 employees in your company, and out of 100, every second month 80 employees or 50 employees are sitting on strike. They are not working, but they are being paid salary. So one point is that you are shelling out the cost. Their salary is costing you, but they are not performing their duties for your company that they are supposed to perform. So that becomes an internal threat to your going concern, clients going concern. How will they conduct business if the employees are not working and not performing their tasks, right? A review of effectiveness of entities internal control. Like I told you, there is an internal audit also that happens at an organization place. So are the controls in place? If they are in place, are they being followed? Are they catching the risks? Are they stopping the risk that could impact the company? So that is another scope of audit. A review of an entity's compliance with corporate governance, environmental issues, contracts, other regulations. So now this is called as your GRC, governance, rules, and regulations and compliance. It is another scope and another field of audit. So there are different fields of audit also. When somebody says I am an auditor, he could be an auditor of just the financial statements. He could be an auditor of internal controls. He could be a GRC auditor also. It is altogether a different stream. Here, what you see is you could all be pretty much aware. You might have heard about ESG audits. So this is pretty much new these days and very hyped these days when it comes to an auditing stream. So India has a Paris Agreement. We have to reduce our carbon emission, right? So there are environment audits also being conducted. For an example, how much of carbon your client is emitting when it comes to manufacturing their product, right? I'll give you a very practical example. Say there is a company that is into dyeing your fabric. They are into garment manufacturing. So when they manufacture a particular garment, they also dye it, and the amount of dye that they are using, the chemical that they are using to dye their garments, they are after washing it or whatever the procedure could be to dye a particular garment, that all flows back into the river, and it is contaminating your water quality. So what are the rules and regulations as per the government that industry is supposed to follow? Like, are they supposed to recycle that water, reuse it, or are they supposed to treat that water before they let that go into the river? So are they following those rules and regulations? All of that is also your job to do. What are the benefits of assurance report? So what the entire activity that you people are doing, the entire activity that you people are getting paid for, how is it benefiting and who all is it benefiting? So the assurance report provides the following benefits to the users of information. It provides an independent opinion. Say for an example, the management which is preparing the financial statements, they say that my work is 100% correct. Now that could be faulty, it could be bias, right? So as an auditor, I am an independent person, I am not their permanent employee, and I am checking somebody else's work. It is almost similar to the fact that you write your paper and you say that, okay, fine, my answers are completely correct and I should pass the exam. No, there is a maker checker difference. Somebody who's making it and somebody who's checking it, because you can always be biased when it comes to checking your own work, right? So that's the core concept of auditing, irrespective of what kind of audit you are conducting, but that is the core. Independent opinion is the core. Remember, I told you in the start of the section that you have to be in a position to influence your client and not be influenced. That comes when you are independent from an external source. That enhances the credibility. The more independent an auditor is, the more credible the information would be. Reduces the management bias, like I told you. Uh, Non-standard or modified opinion draws attention to risk. So as an auditor, we will get into it of what kind of opinions do you give, unmodified opinion or modified opinion. So modified opinion, if you give to the management, it means that something material is going wrong. There is a problem that needs immediate attention by the top cream of the organization. So what kind of opinion you have formed after your audit in your report will depend upon how the senior management will react. So that also comes into play. Relevance of information is improved because of expertise and knowledge of the assurance firm. You have to have a domain expert when it comes to conducting an audit. Like I told you, if it is an environment audit being conducted, an ESG audit being conducted, now a stat auditor cannot come and do your ESG audit. You should have domain experts if you are a client and you are looking for an auditor, because only an expert subject matter in that particular field can form an opinion upon which a company can act. So this is what I've explained here. Now, let me just go through the messages once. Yes, absolutely, Madhvi, you are completely correct here. Because if there is a general market impression that this organization is not utilizing the funds in the right way, people might not give them that amount, and they'll be reluctant in investing into that particular organization. Like, why would I give my money to somebody who won't use it for that particular purpose, right? So you are correct here. But as such, you will not find any written evidence when it comes to goodwill, because goodwill finding a written evidence about your market standing is very difficult. Nobody will write it on paper that this person uses it rightly or not. It is just about financial statements, right? But yes, it's a generic point, but it's a good point. Engineer report about the good material. Yes, absolutely. Market value of the house, correct. Title deed, right. Houses. Yes, all of it is correct. Now, coming to this, general principles of engagement. Now, these are the audit procedures that you follow when you are conducting an audit. So, like I told you, and any audit assignment is divided majorly into three phases. One comes your planning phase, where you decide what is to be done and how is it to be done, how many team members are required, and who will do what will be your timeline, what will your deliverables look like, and stuff. What could be your audit fee? Like, you have to come to terms with, okay, fine, I am doing these many activities, but what will the client pay me, right? So all of that will come into the planning phase. Then is the field work. Now, when I say field work, it is that, say for an example, you have a team of 5 to 6 people. Now they will go to the client's place and they will start doing their work, right? So that they will start observing things, they will interact with the client, they will take up interviews, they will do vouching, verification, they will perform substantive procedures, test of details, and then they will gather evidences, they will document the evidence, they will make working papers. So all of this comes in your field work. And then comes your reporting stage, wherein you collate and collaborate with the team. You consolidate the working papers, put it in a draft report, sit with the client, and then you roll out a final report. So what is the scope of your work? Areas of responsibility. What, as an auditor, responsibility do you hold? When it comes to scope of work, what are you auditing? Is it a financial audit? Is it an internal audit? If it is an internal audit, what process are you checking? Are you just checking HR? Are you just checking marketing? Are you just checking how the production is happening? Are you just checking P2P? Are you just checking O2C? Because you cannot check everything. So you have to define what will you check, and that comes in the scope of the work. Now, that become your scope of work becomes your entire team's responsibility. But apart from that, you understand during the planning phase that my entire team, say of 5 people, who is responsible for what work. Then you agree and formalize the terms of engagement in the contract, which is called as engagement letter. So see, how the business work, how the industry work is that, say for an example, I am working at Big Four and you people are running your own businesses. So you people ask me to conduct, say, we just discussed stat audit. So you people ask me that, okay, fine, Srishti, you have to come and do a stat audit for us. So I will make a legal paper. I will make a legal contract wherein I will define my terms, my conditions, how much of independence do I want, what should be my remuneration, within how much time. Because if you are giving me the money, you would want to know, like you've taken up the classes, right? So you would want to know how many number of lectures will it take to finish the course, right? So in a similar manner, if there is a client who's getting an audit being conducted, he would want to know what would be my timeline. So we mention all of this in the engagement letter. How is the engagement letter prepared? When is it prepared? To whom is it given? Before the letter is signed, we do not start our work. So all of this is mentioned in ISA 210. When we come to that standard, we will study engagement letter in depth. You should have a good conceptual knowledge. You never know when the question comes up that you have to prepare an engagement letter, or a case study comes where it mentions that, engagement letter was not signed off, it was not agreed by the client, and you started the project. Or there could be an instance where in the engagement letter it was written that the management will provide me so and so level of documentation in order to form the basis of my opinion, but the data was not given to me by the client, or it was not given to me in the form and manner in which would have helped me to form a better opinion. So engagement letter is a very important document. It is the document post which you start your assignment. But even during your assignment, if something goes wrong, if the client is not cooperating, it is the engagement letter that binds the client to perform his duties, give me the data. So engagement letter is a very important document, and we will study about it in 210. I'm so sorry. Let me just check. I've gotten a... Yes. Uh, this is one of the part of an engagement letter, but of course it includes a lot of other things like your fee, responsibility, timeline, and stuff. So we'll get into the depth of it once it comes. Uh, then the third point is plan and perform the work required based on risk and level of assurance. You have to, now this comes under three standards: 300, 315, and 330. These are majorly the most important standards when it comes to your course and in practical life also. So you have to plan and perform. You have to understand. See, everything, there could be 100 risks, but you have to filter them out on the basis of materiality, because you cannot check 100 risks. So you have to understand which risk is important, which risk needs my attention, which risk needs to be mitigated, transferred, or treated, which risks require immediate attention, and which risk requires my attention on a longer note. Like, we can defer it. This will not happen right now, but this can happen, say, on a later stage after 6 to 7 months. So I will cater to it, say, after 5 months. But what is the risk that I need to mention and focus on today? So all of this is defined in these three sections. We'll come to it when we get into the course more. Obtain sufficient and appropriate evidence, I've told you, to form your conclusion. Consider the effect of subsequent events on the subject matter. Say, for an example, I have completed my assignment, I have rolled out a report, but something happens before my report is published. So I have to see, after my closing the assignment, rolling out the report, and then, say, for an example, I conducted an audit for April to March. Now I rolled out my report for my March ending, say, by mid of April. Now I've rolled out my report, my work has stopped, my field work has stopped, everything is stopped. I am off client's location, right? I'm on some other client. But my report will be published, say, in June. So between April to June, I will make sure that nothing happens which will change my opinion. There could be something that has come up. I have written in my report that company is functioning on a going concern basis. But after rolling my report and before my report is published to the users of my report, some incident happens which impacts the going concern of my client. So I will have to go back, revise my report, or maybe issue a public statement that when I was auditing this, there was no indication that something wrong will happen. But post I rolled out my report, and between the time it is published, something happened which got screwed, right? So I have to take in consideration the subsequent events as well. Perform overall review and form opinion: reasonable and limited assurance. Like I told you, there are two types of opinions: reasonable and limited. We'll get into it also. Issue assurance report. Of course, you've done all your work, so you have to give a deliverable, which is your report. Document the evidence. Now this is talking about working papers. Whatever you've got, you have to document it, and that will be known as your working paper. Comply with the ethical requirements. So every chartered accountant has certain amount of ethical standards that they have to abide by. This will also come in your PER, and you have to abide by those also. Any professionals apply professional skepticism and judgment. As you go down in your career, as you gain experience, you will be able to better form a judgment basis your professional capability. And skepticism is a questioning mindset. Perform acceptance and continuance procedures to ensure only acceptable risks work accepted. So this is nothing to explain about. Now, here are two levels of assurances. One, ISAE 3000 revised assurance engagement Other the audits or reviews of historical financial information distinguishes between two forms of assurance engagement. One is your reasonable assurance and the other is your limited assurance, right? So these are the two types of assurance engagements that you will always come across in your career. First, let's just study what reasonable assurance engagement looks like. Gather sufficient appropriate evidence to be able to draw reasonable conclusion. Again, like I explained to you all in the beginning, reasonable is that I feel 80% this is correct, but I am not writing in my blood that this is 100% correct and what I have said is 100% true. It is just reasonable assurance. It is reasonable, it is rational to do it. Perform very thorough procedures, that is detailed. If you are issuing a reasonable assurance, reasonable conclusion, which means you've done your work right and in depth. How will you do your work in depth? When you will do a detailed analysis, you will check things in detail. The maximum you can check is what you will check. You will have a good amount of sampling. You will check good amount of transactions. Your sample size will increase when you are doing a thorough procedure. And if you have done a thorough procedure, it will be a reasonable conclusion that you will draw, right? Including now, how will you perform a thorough procedure? You will do test of details and substantive procedures. What is substantive procedures? It is defining the nature of the transactions that you are checking, the timing. See, it's a 12 months audit, but you could be focusing only 6 months, right? So you will perform substantive procedures just for 6 months because your sample size says I am taking only 6 months and you cannot do an audit of entire 12 months, right? So NTE will define the extent of your substantive procedures. Conclude that the subject matter conforms in all material respects with identified criteria. You will check material things. Your focus will be on only material things. You cannot check everything. Gives a positively worded assurance. So most of the time, your opinion will be a positive opinion that fine, these most of the things that I have checked are correct, and these are my recommendations. Whatever is going wrong, this is how you can change it. You have to build professional relationships also. So you have to be firm, but you have to be polite. Give a high level of assurance as per you. The amount of opinion that you are giving, the kind of opinion that you are giving, it is your responsibility that it should be of value to the users of your reports. So it should have high level of assurance. Does anyone have a question, or do I continue? Okay, so what will your opinion look like? In our opinion, financial statements give a true and fair view. How will you write your opinion? As per me, the financial statements that I have checked are true and fair. Now, what true and fair would be? How do you define true and fair? Will come in a different standard, and then we'll study it. Today, I'm just giving you an overview of what would the course look like and what will be covered in different standards. So true and fair view, but in a material respect. So true and fair view could be in an immaterial respect also, and true and fair view could be in a material respect also. Now it depends on who the user is. Say for an example, if it is a bank who's using your report, for them your liquidity ratios, your cash flows presentation will have more importance. So they will focus on whether the true and fair view picture comes to your cash flow forecast. So material aspect depends on who the user of your statement is, and then whatever is material should give a true and fair view. The financial position of XYZ company, as then you specify the period and of its financial performance and its cash flows for the year ended in accordance with ITNA. So when the question in your examination comes that you are supposed to give an opinion or you are supposed to write an audit report, there'll be a particular format that you'll go through when you are writing a report, and this is the kind of language that you are expected to write in the report. So please focus on the words and the language that is written in this PPT, and when you solve the questions also from the practice kit, do highlight these words, do highlight the kind of language which is being used, because you are a professional. A professional writes an audit report, so you have to focus on the right language, right? So just tell me one thing. Do you people want to revise this and then continue with a new topic? Because this topic that I will start will take another 1 hour. So do we continue with this topic tomorrow, or do you guys want me to, stretch the timing of the class by half an hour? Please mention it in the chat box so that I get an idea of what you people are expecting. Are you people okay if the class stretches by 1 hour? Okay, so a lot of people are in favor of continuing it today only. So, okay, let's just continue then. Okay. So incorporation and ownership. Just give me a moment, okay? So incorporation and separation of ownership and control. Like I told you that there is a corporate wheel. I hope you all know what corporate wheel is. So it is a separation. One is the owner of the company and another is a company. Company is completely separate from its owner. It is a different entity, right? So how do you separate things? How do you separate things? Who is working for the company, who's the owner of the company, and the identity of the company is in its own. Because each person, each entity has its own agenda. They are operating with a different agenda, but their objective is that the company should run in a right manner, right? So let's just understand what are the three roles, who are the three people first. How do we differentiate these three people? Business can operate as a sole trader. Now, here in this first paragraph, you are getting a view of what kind of businesses look like, or how different businesses operate. One, there could be just one trader. It could be a sole proprietor. It could be a partnership wherein you have 10 partners or stuff. It could be a limited company. You could register your business as a company. You could register your business as a private company. You could get your company listed and it can become a listed company, right? You can have an LLP registered. So if you are starting a business, how are you getting your business registered? This is what this particular paragraph defines. Status offers protection to investors. Now, when somebody is investing in you, uh, there could be private equity investors who invest, like you guys would be. I'm just assuming that you guys would know about what Shark Tank is, right? So they are investing in people, they are investing in startups, because that is the nature. Uh, People in the market, when you go open up a demat account, you are investing in a listed company. So the status of your business has an impact on your investors. Some people only want to invest in a listed company. Some people want to invest in a startup. Some people want to invest in a bootstrap company. So what is the status of, what is the nature of your business? How have you incorporated yourself? As they cannot be held personally responsible for the company's debt. So like you'd know that there is an equity shareholder who is responsible, who's the owner of the company. There are debt holders, there are different participants when it comes to a company, and everybody has their own set of liabilities. So when it comes to equity shareholders, if I tell you a little bit about law, so what happens is, if the company is about to restructure, you have to pay out your debts, or there is a liquidation happening. So what happens is, people, the debtors, they are paid, preference shareholders are paid, and it is only the equity shareholder who's paid, or whatever is left. And sometimes there is no guarantee of being paid to an equity shareholder. So every person has its own different responsibility when it comes to investing in the company, right? So there better be a right line of definition of what is the nature of your business and what kind of investors are there in your company, and who has what role to play. the creation of limited companies referred as an incorporation. So when you incorporate your company, when you switch from say partnership to a company or a trader to a company, when you get yourself registered, you get an incorporation certificate. So that's what incorporation is all about. Incorporation has following implication. Now what happens when you get incorporated? Separate legal entity between owner of the business and business itself. So say for an example, if you have been operating as a sole proprietor, right? So now the business and that person who started the business, they are the same. He's the sole responsible person for that business. So there is no difference, there is no legal entity to separate it. But when that person gets that his or her business registered as a company, now that person is different. He's the owner, but still he's different, and the company in itself is different. Say for example, Reliance Industries. Now Reliance in itself is a different entity, and Mukesh Ambani is a different person, right? opportunity of the Opportunity for the owners or investors to detach themselves from the operations of the business. Now once you've got yourself registered as a company, the owner gets an opportunity that now they can detach themselves from the company. Now their role can become limited, their responsibility can become limited, and their liabilities also become a little bit limited. NED for managers to operate business on a daily basis. When you incorporate your company, you start hiring managers. These are the people who run your business on a day-to-day basis. So what happens is that there is a structure. Once you formed a company, one, there is an owner. Second, there is an investor who also tends to become an owner if that person is an equity shareholder. Now, say for example, if I buy shares of Reliance, now I will not go to a company on daily basis, and I will not have any say when it comes to running their business on a day-to-day basis. That is the work of directors, that is the work of their management. So now you're understanding the three levels. One is the owner, who is only giving them the money, giving company the money, right? And when you give company the money, you expect that that money is not being exploited, is not being used for personal purposes, and it is being utilized in the right in making right decisions for the company. And second is the people who are going on a daily basis to that organization, sitting in their offices and running that business. These are your directors, your managers. Incorporation provides financial protection to shareholders. Now, what happens when you get incorporated? There is a certain amount of rules. There are certain set of rules, regulations, liability of getting yourself audited. All of these rules and regulations come into play when you get your company registered, right? So it gives shareholders a better sense of protection that now my money has certain is being regulated by certain laws, and it won't go down the drain. I won't be cheated. See, for an example, if I give my money on interest to somebody out of market without any deed, there is a high chance that I might not get my principal and my interest amount back. But if I am investing my money in, say, for an example, an FD with a bank, now it is more regulated. It has certain amount of rules and regulations to follow when it comes to a bank, right? So I feel more safe when I invest my money in FD instead of giving it to somebody in the market, right? So this is the same concept when it comes to the shareholder. Shareholders seek maximization of their wealth. Now, if you are a shareholder, you are investing in a company. As a shareholder, what would you want? That their share prices rise. What is your basic concept? I bought a share of 100 rupees. I hope that in another 6 months or 7 months, from that 100 rupees per share, the value goes to say 350 per share, right? So as a shareholder, you are not really interested in day-to-day activities of that business. Your basic point is, I want to earn money, I want to create wealth because I am investing in this particular business. So your focus would be, how much of dividend am I drawing from that company? Is that company growing its revenue? Is my share price growing? Am I getting any kind of interest from that company? And so forth and stuff, right? So you focus more on profitability and share prices. Now, directors or management seek increased salary. Now, like I told you, one is the owner who's investing, who's giving money to run that company. And second is the directors and management who are going to the company on a day-to-day basis and running the business. So if I am a director of a particular company or I am working as a manager in that particular company, my focus will be how well am I performing and how my performance is being rewarded. Am I getting bonus? Am I getting bonus on time? Is my variable component right? Am I getting a industry standard salary? Am I getting increment? Is my employment protected? For an example, uh, if I like currently there is a startup culture in India, right? So before I join any startup as an employee, my first instinct would be, will does this startup have a good future? Because if I am coming to that particular company as an employee, I don't want that I join this month and after 6 months that startup shuts down, right? So that will be my focus. So there are different parties with different focuses and different agendas. This conflict leads to legal requirements. Now what happens is that these two people, the shareholders and the directors, end up getting into a intellectual fight. Why? Because shareholder wants to maximize the wealth, which means you have to cut down costs and you have to increase the revenue. But director and the management, they want more salary increase, they want better increments, they want more bonus. So ultimately it is increasing the cost, right? And director would say that today my salary is say 50 lakhs, I next year I want my salary to go to 60 lakh, right? But the shareholder will say no, if you draw 10 lakhs extra from my wealth, my share price will go down, my dividend would go down, right? So these people can end up fighting. This conflict led to legal requirements for financial statements to be produced by directors to allow the shareholders to assess the performance of management. So, when you conduct an audit, one thing that you check is that there are no personal expenses being conducted when it comes to your cost shell out. Like, if I go and I check the expense side of the P&L, I see that there are no bills which are of personal expense in nature taken up by the director, right? So what happens is that in financial audit, when directors present the financial audit report, they are telling the shareholders that I am running the business correctly. My decisions are in favor of running your business correctly. I am giving the maximum amount of benefit, and I'm working for the objective of the organization and objective of the shareholders. I am working for the betterment of this company. I am not taking a share from your company. And I'm not misusing the funds that you've given to our company. I am not utilizing your funds for personal purpose. Now, now here comes accountability, agency, and stewardship. Now, because there are different people, these different people have different set of responsibilities. So with responsibility comes in accountability. Like if we see in corporate culture also, if there is a trainee, he would have less amount of responsibility. So he will only be accountable to his own work. But if there is a manager, so manager is a higher position in the corporate hierarchy. So he would be responsible for his own work, but he'd be responsible for the entire team. So when the manager sits for a review in with the partner asks how is the team working. So what happens is that manager has the responsibility of the team, so he has the accountability of the team also. So if there is any other trainee or a consultant who has not performed well, now manager becomes personally accountable for that person's performance. So there are two terms. One is responsibility and the other is accountability. The higher the responsibility, the higher the accountability, right? So accountability, quality or state of being accountable. You are responsible and answerable. Responsibility comes with answerability, and accountability is that you are answerable for this. That this the quality or state of being accountable, that is being required or expected to justify actions and decisions. Why did I take this decision? Why is this happening? If something did not happen, why it did not happen? Where was the lapse, right? So you are accountable, you are answerable. It suggests an obligation or willingness to accept responsibility for one's actions. Stewardship, the duties and obligations of a person who manages another person's property, like directors, are considered as stewards of company for shareholders. Now, it is not directors' money, it is the shareholders' money. So they are accountable, they are answerable to the shareholders, right? So this is why directors are called stewards of the company. Agents. Now comes the third party, which is the agents, the people employed or used to provide a particular service. In the case of a company, the people being used to provide the services of managing the business, as in your business manager, your HR managers. Now comes a level low, from directors to managers. Businesses also have the second role of trying to maximize their personal wealth in their own right. The key reason of having an audit or review conducted be seen by working through the following case studies. I'll give you a case study later on, but are you people clear about the director's role, shareholder's role, and the agent's role? Agents are your managers. So can you please write it in the chat box and share if you people are aligned? All right. So, like I told you all, that first we'll focus on the conceptual knowledge. Once the concept has been built, we'll get into the practicing the questions in the case studies. So now here your conceptual understanding ends. I have explained all the concepts. Now from this angle, this slide, your case study starts. This will use the concepts that we have just studied. So what I want to do is that I want you all to do this in your homework. First, revise the concepts that we've studied and then solve this case study. And tomorrow when we begin with the class, I'll take up your doubts in case you have any when you are solving this case study. Is that okay? Guys, is this okay? All right. Okay. So this solving this case study becomes your homework. I will share the link of the notes. You will get this PPT today. Revise this, then solve the case study, and then we can discuss in case anybody has a question. And we'll from tomorrow we'll get into the core syllabus of your AA. We'll start with standards, different standards one on one, and then we'll start solving the questions also. After every 4 classes, we'll conduct a doubt class. But for now, I am giving you all my number. Please note it down. Reach out to me personally, or in case you people have any other students group for an interaction and you want me to join that group wherein I can cater to your doubts, you can add me in that group also. So my number, I'll write it in the chat box. Is my number visible to everybody? All right, please save my number. You can get in touch with me in case of doubts. I will try. I think there is an AA group being prepared by the VGLD team also, and everybody will be included in that team, in that group. So you all can reach out to me personally. Even in weekdays, because I have a full-time job, I might not reply to you spontaneously, but I will get back to you by the end of the evening. give me some time, say for example, an hour or so, and we'll try solving your doubts one-on-one also. So let's just wrap this up. We'll meet tomorrow by 9. Uh, I hope you all have a good day ahead, and please do this homework, but all right. So bye-bye. So my name is Srishti Shukla. I'll write the spelling also. So that's my name. Okay. Fine, then I'll take your guys' leave. Bye-bye.